My name is Tom Asprey, and today I'd like to introduce you to relative performance analysis. This is part one of a multi-part series, and for those of you not familiar with relative performance analysis, it's based on calculating a ratio of any stock, ETF, or mutual fund to a benchmark such as the S&P 500. By concentrating on those issues that are outperforming the S&P 500, your chances of success are greatly enhanced. Though many traders avoid the long-term charts, every week and every month I look at the weekly and monthly charts of the major stock market indices as well as the sectors. In 2012, there was an important development in the healthcare sector, as it had been a 12-year trading range which was finally overcome in 2012. This chart from the article shows this trading range, lines A and lines B, that developed from the high in 2001 and the high in 2007. The breakout of this range was quite significant and suggested that the healthcare sector could easily double in the coming years. It was also positive at the time that the on-balance volume, one of my favorite technical studies, broke out well ahead of prices. On the right-hand side of the chart, you can see a similar breakout in the IBB, which is the iShares NASDAQ Biotechnology Index, which also completed a major range. And it has been, like healthcare, one of the stellar performers of the past 3 years. According to Morningstar, the XLV was up 17.4% in 2012, 41.4% in 2013, 25.1% in 2014, and is up over 5% this year, making it one of the top performing sectors in what has basically been a flat year for the S&P 500. This chart of the healthcare sector is monthly and goes back to 2009. We have a standard candle chart here that also includes some stark bands which help me identify high and low risk buy and sell areas. Below the chart is the RS, a plot of XLV versus the S&P 500. You can see that the RS, this red line, was in a downtrend for 2009, 2010, and in early 2011, specifically April 29th, it broke through this downtrend and moved back above its moving average, which indicated at the time that the healthcare sector was now a market leader. This was well ahead of the breakout that occurred in the spring of 2012. Since that positive signal, the monthly relative performance has stayed above this moving average, though it dropped down to it in September. This identified XLV as a long-term market performer, and as noted as the Morningstar performance results, it definitely earns this title. This chart shows the relative performance in a different format of the SPX, the S&P 500, which is in green, and the XLV as they started to diverge, and the wide gap between these two lines indicates how much stronger the XLV has been than the S&P 500. Whether you're a trader or a 401k investor, this outperformance in the XLV, even if it's only 20% of your retirement account, would have made a big difference. I monitor the monthly relative performance on an ongoing basis, but also the weekly RS analysis, as indicated in this table, which was recently published in Forbes, to look for changes in that weekly relative performance as a way to add or reduce positions in the dominant sectors. This weekly chart shows the breakout in 2012 the RS had already been in an uptrend, making higher highs and higher lows. That occurred in the $36 area. And as long as the relative performance did not form any significant divergences with price and did not break its uptrend, it was the sector to be in. As the chart continues into 2013 and 2014, you can see the uptrend in the RS line continued and oftentimes dropped back to the moving average, such as occurred in May of 2013, was a good opportunity to add to one's position or get in the XLV or another healthcare ETF. Of course, nothing goes straight up, and there were quite a few setbacks. Another one here in the April of 2014, as the XLV dropped from a high of around 59 to a low of about 54 before it again started to move higher. An equally sharp correction occurred in October of 2014, but as this weekly chart indicates, the following week XLV was met with heavy buying. Of course, XLV, like many ETFs, was hit hard during the August 24th sell-off, but you can note that the relative performance, though it dropped below its moving average, is still holding well above longer-term support and is on the verge of moving back above its moving average. Though these charts are courtesy of Trade Navigator, an excellent software program, you can run this analysis online at many free sites, and you can also calculate it just using the price data. In future articles on relative performance analysis, I will look more closely at the weekly and the daily action and show how my unique analysis of relative performance can help you identify important turning points where one sector takes over leadership in the overall market. Hope you found this beneficial. Thank you very much.